Hello and welcome to the Global Dialogue. I'm Shereen Bhan and it is my pleasure to welcome on the show Wael Sawan, the Global CEO of Shell. Thanks so much for joining us here on CNBC-TV18. It's great to have you back in India. I don't know how many people remember this, but you spent, 2006 to 2008 here in India, but this is your first trip back as CEO.
Very much is. Thank you very much for having me here, Shereen. It's a pleasure to be in India at this incredibly exciting time for India. And it's a privilege to actually be here as the CEO of Shell in a country that has been a long part of our history, over 90 years here in India. And today it is one of the beating hearts of the Shell company, so a privilege.
You know, since you're talking about this being one of the beating hearts of the Shell company, let's talk about your plans for India as far as further growth, expansion, investments are concerned. Well, you know, in terms of the mix that you're currently seeing play out here, what looks most exciting to you?
I think firstly, maybe just to sort of say the Indian energy transition is very much aligned with what we see at Shell and what our strategy is. We fundamentally believe in the role of a company like ours in providing energy security at affordable prices, as well as supporting the decarbonization of the energy system. And that's exactly what the Indian government is aiming to do. So we're very, very aligned. India serves a few key elements of our strategy. One, it is a core hub for us from a talent perspective. Actually, just recently, India has become the largest Shell population in the entire world. Over 13,000 people, engineers, technologists, AI specialists, all serving the Shell group across all the locations that we have. And so that is really, and that's why I call it the beating heart here, just because of that incredible talent base. It's also a big innovation hub for us. We can continue to develop new ideas here and export them to the world.
IP? Ideas is one thing. IP?
I think IP, ideas, both. We are able to really develop opportunities here because we are seeing a forward-leaning government when it comes to the energy transition. So you can take a lot of that, actually tailor it for the Indian context, and then over time look to export it. But your question around the asset base, I think firstly, we're proud of the fact that we have spent close to or over $5 billion already in India. So we are starting from a very strong base, and it makes it a good foundation to build off. As we look into the future, we see great opportunities. For example, in the gas value chain. We have a Hazira terminal in Gujarat. That's an opportunity to continue to grow. We are playing, of course, in the power space. We acquired Spring not too long ago, which is a core element of our power strategy. And we continue to invest heavily in that as we broaden the footprint. So there are multiple opportunities to play in the conventional energy space as well as in the low-carbon energy space.
Well, let's talk about the low-carbon energy space, because one of the big bets that you are making is on electric vehicle charging infrastructure. And I know that you're very bullish on growth in China, you're very bullish on growth in Europe as well as the US. Where does India figure in all of that?
I think India has a very important role. So indeed, we are the second largest EV charging player in the world after Tesla. And we're looking at it from a global perspective. You're absolutely right to say we see a lot of momentum at the moment in China. I mean, the penetration of EVs into the overall vehicle pool is close to 35% and expected to be around 50% by 2050. That's both two-wheelers as well as four-wheelers. We also see good momentum in Europe, not as fast as China, and similarly in the US, though not as fast as Europe. So
are you worried about what we are seeing at this point in time with this slowdown across EVs, across geographies that, that's playing out? I'm
not worried. I mean, we look at this as a long-term bet. So what we see is EV costs are coming down. It's going to take time for the penetration to happen. I mean, it's taken decades to be able to get the current car pool that we have, and it'll just take time to be able to get the EV penetration in. What we will do is we will continue to tailor our investments to the areas where we see the most traction. So, for example, if you see the US slowing down a bit, we will potentially ramp up in places like Europe or China or India. And what we see in India is an opportunity to really leverage our existing footprint here, which is around 350 retail sites that have now developed a very strong customer base, where we've developed real operational excellence in the way we market. And I'm really proud of the brand and its recognition here in India. It's one of the countries in the world, arguably, where our brand is recognized and appreciated more than any other country. And that gives us a very, very powerful, I think, asset to be able to build off.
You know, you talked about the asset base in terms of the retail outlets, 350, but that's really been the disappointment on account of the legacy issues around deregulating of prices as far as the sector is concerned. What's the plan now on expanding this retail base that you have?
We continue to look at expanding it in a very measured and focused way. In general, all around the world, what you find is, in particular, our retail network is exposed to the realities of macro conditions. At the end of the day, this is the touch point with the economy. This is the touch point with the consumer. And so governments tend to intervene to be able to sort of support the consumer. And so what we do is we focus very much on making sure that every investment we make is one that is resilient to the changes in the macro picture. And it's important to recognize, of course, we are very hedged as a company, all the way from our upstream production or gas production, all the way through to the customer footprint that we have. And so our view right now is we continue to be methodical in our growth in India. We continue to focus on the key hubs where we see that we have the advantage to be able to win. And we'll continue to fine-tune and to improve our offering so that we can become the undisputed best retailer in India when it comes to fuel retailing and eventually EV charging.
So when you talk about methodical investing or expansion in India, I'm trying to understand what that could potentially mean. So, 350 could be what over the next 5 years? And of the 350 that you currently have, how much of this will in fact look after the electric vehicle charging infrastructure as well?
I won't speculate as to how big it can be. I think suffice it to say that those 350 sites and potentially other partnering opportunities all create that foundation that allows us to grow the EV charging business. We start from a mindset, and this is not just in India, globally. We start from a mindset that actually our biggest asset is that on-the-go opportunity, right? So those retail sites that allow our customers to be able to come in, get the comfort of the convenience store that we have, get a nice cup of coffee, get whatever ingredients and goods they need, and get the service that they expect. That is our base. It's not really charging at the home. And so we want to leverage that, and we continue to look at opportunities to partner with other players in India and beyond India, where we could look at opportunities to grow the network. And that's going to continue to be our strategy.
Another area of opportunity that you are looking at and betting big on is biofuels. And India has, of course, been driving that. In fact, there was a biofuel alliance that was announced as part of the G20, which India hosted last year. Where does India fit in on the biofuel side for you?
We're excited about the opportunities. It was one of the things I was sort of looking to explore coming in this visit to understand where is India's view. What's really helpful is, under the Prime Minister's leadership and his vision to drive the biofuels business, the mandates that are coming in place, up to 5% soon and then more thereafter, are creating the right pull. As you rightly said, we are the largest player in biofuels in the world, actually. We have a big production, when it comes to biofuels, a big production hub in Brazil. But we've also recently invested in renewable natural gas or biogas, biomethane. And that was in Europe. We acquired a company in Denmark for $2 billion called Nature Energy. And so we're trying to continue to build that capability, both on the biofuels as well as the biogas side. We actually trade around 7 to 8 times more than what we produce. And that's what's given us the scale. When we look at India, you have in India many of the fundamentals that help that. You have the right government policy, you have feedstock, which is usually a challenge in this business, and then you have a massive demand for bioproducts. And so what we need to be able to understand is where can we compete here, what technology can we uniquely bring, and what capabilities can we bring. Or is there no space for us? And that's what we're trying to look at the moment.
What are the answers to all of those questions that you've listed out? Do you have some indication?
I leave with cautious optimism about the opportunities.
Why cautious optimism?
Only because I think it's an area that there's a lot of players in at the moment. And so one has to really be clear what are the differentiated capabilities or who to partner with to create that. I think the
Are you in talks with anyone?
We're in talks with everyone. So we have great relationships across India, and it's been a pleasure, really, to meet many of the different and the big business houses here over the last 2-3 days. More to understand what are the plans and where is it that we could potentially bring value. I think undoubtedly that position that we have in Brazil, in Denmark, what we're establishing around the world, gives us an opportunity to be able to bring our learnings, our technology, our capability to this area. And to then to be able to bring that package to India as an offering. But early days, we've started, by the way, with certain small investments to test the grounds. The question will be how big we scale up, back to your earlier questions.
You know, speaking of early days even as far as hydrogen is concerned, and I know that you're a big believer that there needs to be viability because profitability and returns to shareholders is eventually what you need to target. So how do you look at this whole hydrogen story playing out and India's role in pushing that over the next few years?
I think green hydrogen, or for that matter, clean hydrogen, whether it's green or blue or otherwise, is an exciting part of the future energy system. Exactly how it will fit will depend on how much we can drive that cost trajectory down. Right? We are investing in a significant facility at the moment, north of €1 billion in Rotterdam. It'll be a 200 megawatt facility, the largest in all of Europe, to take that first bet to be able to prove the concept. At the heart of these clean hydrogen opportunities, you need, or green hydrogen in this case, you need cheap power.
Yeah.
And the question then becomes, how much demand is there for clean power? If there's high demand for clean power and there isn't enough supply, prices are going to be high. Better to put those electrons directly into the customers who are driving electricity demand. But if the electrons become cheap, then that's an opportunity to take cheap electrons, create green hydrogen, and either use it here in the country or potentially to export it. India, I think, has some really strong strategic opportunities in this space. You have a massive demand for power. Mm-hmm. And so that means that you could build up a lot of that power base and then choose when to put those electrons into electrolyzers to be able to produce green hydrogen. You have massive industry. And the way to sort of over time decarbonize industry will be with clean molecules, of which green hydrogen could be one. And of course, you have a very, very competitive cost structure that potentially allows you to produce green hydrogen here and one day export it. But all of that will take time. The energy transition is stubbornly slow and difficult for various reasons. But at some point, I think it'll be a real opportunity to be able to unlock certain parts of the energy transition.
So do you see India's role in, sort of scaling out the green hydrogen story as an opportunity or a threat to you?
I see it as an opportunity. To be honest, the world is desperate for green hydrogen and all forms of low-carbon solutions. And we see opportunities for us to also invest in India. Companies like ours have been embraced in India. We don't see it as a threat at all. If anything, success in India will allow the demand side globally to start to materialize. You have countries like Germany that are talking about shifting to a green hydrogen economy. You have Japan and Korea that are keen in green hydrogen. The more we can build supply bases, the more that demand starts to materialize, the more you have a market to be able to work around. And that's what happened in the LNG market. That's what I hope will happen in the hydrogen market. Since
you talked about LNG, let's talk about what's happening as far as Hazira is concerned. And overall, demand. I mean, 2022 was a great year for Shell, the highest ever profits registered by the company. 2023, of course, coming off that high base, has seen a little bit of a decline, but nevertheless a great year, better than analyst expectations. What does 2024 look like specifically at this point?
Look, I'm excited by where we are as a company. Last year, we announced a very clear strategy at our Capital Markets Day, where we said we will relentlessly pursue performance, discipline, simplification. There are two key elements that sort of impact our realities. There is a macro picture that we cannot control, right? Where prices are, commodity prices, that we cannot control. And that's a function of many global realities, including, by the way, geopolitics, as well as, of course, supply-demand fundamentals. What we can control is our performance. What we can control is our investment opportunities and how we allocate our capital. What we can control is our cost structure. What we can control is the way that we are able to compensate our shareholders and enhance their distributions. And what we can control is continuing to have strength in a very strong balance sheet that allows us to win. We've done a lot of that. So we're starting to really build that resilience, and that's why you see the market also starting to really appreciate the Shell story. But I would say we are literally early days in what will be a long journey. This is, in my mind, a transformation of an incredibly capable company. One where we have privileged assets, brilliant people, a great brand, and we need to now achieve our full potential. And so 2024, to your question, I think is a year where you will see that transformation continue. We have put some bold targets out there, cost reduction targets. We've been very clear around our capital allocation, roughly 22 to 25 billion. And we have some exciting opportunities. We've talked about $10 to $15 billion spent on low-carbon solutions between 23 and 25. So we're literally at the cusp, I think, of an exciting inflection point. And 2024, in my mind, is an important proof point on that journey.
You know, you talked about the transformation, and let me put this in the context of the transition, which you have called one of the most complex issues, and you said that it throws up challenges and dilemmas pretty much every single day for a CEO like you in terms of where you deploy your capital. And at the end of the day, while there is a lot of push and a lot of pressure on trying to achieve the targets, you have been very clear about the fact that you need to pace the transition out as well. What's the big challenge that you face today as you move towards some of these ambitious goals, towards some of these targets that you've set out for yourself, but at the same time not steer away from what the world is asking companies like yours to do?
Look, I think the biggest challenge is to get the nexus of government policy, customer demand, and supply from companies like ours to come together in a way that truly allows scalability of that business model. Right? You need all three. Companies like ours, as we have been aiming to do and continue to do, need to invest capital to be able to create some of those low-carbon solutions. And that's why our investment in green hydrogen, that's why our investment in biofuels, that's why our investment in EV charging. You need infrastructure. Otherwise,
so how do you respond to the criticism that you're not investing as much as you should or more than what you are on the renewable side as opposed to the committed business?
Yes. I think I start off with the humility to say all inputs are welcome, right? But with the conviction of the strategy we have. The strategy we have is one that says play to our competitive strengths. Right? So some, for example, would ask that we invest a lot more in renewable generation, where we have said we do not believe we have particular differentiated strength in renewable generation. Our cost of capital is higher than the returns in some cases in that renewable generation. Where we do have competitive strength is in integrated value chains, where we can actually take renewable generation with trading and with our customer interface to create value. And so I hear the concerns by many to move faster. I understand their frustrations. And what I'm trying to do, and what I think the industry is trying to do, is to move at a pace that is commensurate with being able to ensure that we create value for our shareholders while we transition the company towards lower and lower carbon. If you get the first one wrong, you won't have the opportunity to be able to transition. And so it's finding that balance, and that's why, as you rightly and I think very appropriately defined it, these are the dilemmas, these are the choices that you make day in and day out. And when we lean in with conviction and we make it work. But then sometimes you have to say, this is not my game to play, I need to step back and allow somebody else to come into that space. I'm growing more and more confident in what I see. Right? I mean, just last year, we had almost 500 gigawatts of new capacity coming in, predominantly solar, but a lot of that coming through. And that's massive. That is a big step forward from where we thought we would be a few years ago. And, you know, India is playing a massive role in that. China is playing an incredibly important role, but it has, you know, coming here over the last 3 days, and just hearing the plans and the ambitions, I think I had underappreciated the incredible momentum that India is building. And it's a credit to the Prime Minister and his vision of where he wants to take the country with the energy transition. I think it can be a really big stimulus for the rest of the world.
You know, I want to go back to the comment that you just made about the game that you don't want to play, or the games that you don't want to play because they no longer play to your competitive strengths or your competitive advantages. So are we going to see you getting out of more businesses as you have done as far as your offshore wind projects are concerned in Ireland and France? Or, are those the kinds of decisions that we will see you make as you balance the transition as well as what you continue to be committed to?
Yeah. You know, I talked earlier about this mantra we have of performance, discipline, simplification. In my mind, that middle one, discipline, is key, right? Which plays to the heart of your question. Discipline is as much about what you don't do as about what you do. The energy transition, with all humility, is a learning experience for us. I'd be lying to you if I was sitting here saying, look, I have an incredibly clear linear pathway between now and 2030. I have the humility to tell you, we've learned, And in certain areas, we've doubled down, like in biofuels, where we felt actually we can create value and bring something unique here. You're going to see us do more. In EV charging, we've played and we've said, actually, we think we can create a business model here. But for example, in residential power, we tried. We spent a lot of money trying. It didn't work. And so we had to let go of it. And so beyond individual projects, an offshore wind project here or there, that's going to, at the end of the day, depend on supply chain realities, price realities, government support or otherwise, and so on and so on. Those are individual projects. Have we given up on offshore wind? No, we're still developing. We've just commissioned a massive offshore wind project in the Netherlands, 760 megawatts, and we'll develop another one that's going to feed our green hydrogen facility. But in other jurisdictions, we don't find that we can make that viable. And so part of exercising the discipline is knowing when to step back, but also saying, actually, through a disciplined investment program, we're going to create value in this pathway.
So what are the big risks that you see to the strategy that you're working with, to the targets that you've outlined at this point in time? As you rightly pointed out, there's a lot that's not in your control. Geopolitics is the big one there. But outside of the uncontrollables, what do you believe could be the potentially big risks to the strategy?
Look, I think every single strategy is great on paper until it faces two key realities. One is the outside world, and two, the execution of the strategy. What I was very focused on coming into this job is the execution. In my mind, we have to get right. There is no choice. And so the way we framed it was, rather than give a 6-7 year strategy, we talked about what we call the sprint, up to 2025. We said to the outside world and to the inside world, to us, we have 10 quarters, literally 10 quarters, to be able to fundamentally drive a different execution muscle in this company. Performance, discipline, simplification. We're 2 quarters into those 10 quarters. And so for me, that window of 10 quarters, to be able to really transform the capability of the company to be able to become that performance-focused company, are key. That was always, I think, the outside world was questioning, can they do it? And I'm pleased with the momentum we have built. And we've just announced with our Q4 or end of 2023 results, progress on every single one of the promises we have made and good momentum thereafter. And so, biggest focus is keeping that so that we keep driving it forward. I think the other one is the external world. And put geopolitics aside, as you said. Everything from the abilities of governments to really hold on to policies for the long term. The energy transition is not short-term investments. Our investments pay out in 8, 9, 10 years sometimes. That goes across 1, 2, 3 different government administrations in different countries. You need the fortitude and you need the stomach to be able to really support the energy transition with the measures. And what you find sometimes in around the world is, as governments change, policies change. And it starts...
Priorities change as well, and fiscal constraints change.
Absolutely. Absolutely. All true. And you now have long-term investments that potentially are no longer in the money, and that will erode investment appetite by companies around the world, which will slow down the transition. And so we as a company are betting on the energy transition. We're not hedging. We are betting on it, but recognizing we need to do it at the right pace. What worries me the most is that the energy transition does not happen at the pace that we would hope, especially given that we have actually leaned forward. I mean, to put $10 to $15 billion in a 3-year period makes us one of the largest investors in the energy transition in public markets. Tells you something. Now we need to be able to make sure we deliver the value on that.
Mm-hmm. And I go back again to something that you said, and I think that's a crucial aspect of the job of a CEO as well, is to learn the art of sacrifice and not wanting to do everything that you potentially think that you can do. What's been the biggest learning for you, through this year running Shell?
The biggest learning is when you have an organization of incredibly capable people, and we recruit amongst the best people in the world. Sometimes you fall into the trap of believing we can do everything, right? And you can actually lose focus. And so I'd say my biggest learning is actually if you focus for impact, you truly create impact, right? And that could be on focus for value or focus for lower emissions. That's why we've sort of introduced the tagline in our company, more value with less emissions. Because if you try to run or allow an organization of close to 92,000 to run in 25, 35, 45 different directions, you lose the impact of when you focus the organization on a handful of big things that could potentially move the needle not just for the company but for the world. And what we've tried to do is to focus. We had multiple sectoral coverages. We've now said, no, we're going to focus on two key sectors, transport and industry. Those are the sectors that we have traditionally and historically serviced. Let us help those customers through the energy transition. We focused a bit more on biofuels, EV charging. And so the more we focus, also we need to focus on a few countries. We can't do it in every single country. And so for me, that ability to be blessed with so much resource and capacity and focus it to achieve that impact has been the biggest learning. And we'll need to continue to do more and more of that and to improve ourselves in that space.
Let me end by asking you, will India be one of the focus countries for Shell, and what could it potentially mean in terms of capital deployment? You talked about the $5 billion that's already been invested in India. What are we talking about over the next 5 to 10 years in terms of potential investments?
I think let me start by saying, I leave here filled with confidence around where the country is going and what the opportunities for a company like ours are. I leave here with the conviction that we have the people and I think the relationships and the confidence of the Indian public and the partners to be able to grow. I won't pretend to give you a number as to how big it might or could be. I think that's now left to our imagination to be able to really come up with the best value propositions. And then the sky's the limit. We can do a lot in the country, but we need to be smart around where we can add the most value with the right partners to create value for India. And I challenge myself, I challenge my team to be really innovating in the space of what could be in a country that seems to be saying we can. And that's where I hope the two will intersect and we can create something for India and for Shell that's very special.
By when do you believe you could have an India plan?
I think we're talking months, not years. I think we want to get very clear on the direction of where we want to go. I won't tell you that I will announce what the plan is. I'll tell you that we will have a view of how we will go, and then we will execute this in the methodical, disciplined, focused way that I mentioned earlier.
Well, Wael, it's been an absolute pleasure. Many thanks for joining us here on CNBC-TV18. We wish you the very best of luck with Shell and the big transition that you're making, and look forward to seeing you back again in India with the India view on India. So look forward to that conversation as well.
Thank you very much, Shereen.
Well, with that, it is time for us to wrap up this edition of the Global Dialogue. From all of us here on the team, goodbye and many thanks for watching.